He actually didn't care about retirement. He just wanted to save in taxes. He had a business. He had a W-2 income. That is the perfect scenario. Because guess what? When you have a business, like I said, this is the best scenario. But you want to treat your business as a business so you can take a deduction. You want to be careful. If you are treating your business as a hobby, you cannot take deduction. And IRS kind of strict on that, so you want to watch out. So how do you make sure your business is a business? You do bookkeeping, you do you do business, like you generate money, or you are preparing to generate money in the first year or so. So he has a business and he had a W-2 income. That's a perfect scenario. He was single. He did not have kids. So single is kind of the worst case scenario because you don't have any dependents, especially if you don't have any dependents. But when you have a business, you have a lot of room to save. You have a lot of room to make deduction. So every year, John was being in taxes and he was tired of that. I did the analysis for his last 3 years and I noticed there's like very common missed deductions are in there. Let me give you an example. Home office deductions. He works from home, no home office deduction. That saves so much money. Nothing that shows that he drove for work, even though he did, like with our conversation. So no mileage deduction. Not even, he didn't take mileage, he didn't take car expenses. So you can either take one of them, you cannot take both, but he didn't do any of these. And there are other few common deduction he did not take. There's also some pre-tax benefits. He could take care of it. It's offered for him but via his job, but he's not taking care of them, or he's not taking advantage of them. So we made sure he takes advantage for every pre-tax account as possible. And we did amendments for the last 3 years because that's as far as you can go. You cannot go further than that. And he got back a lot of money. When I'm saying a lot of money, more than 10,000 a year because we took the proper deduction. We went back and did his bookkeepings to make sure like we don't miss any deductions that he's eligible for. So he got back a lot of money. Collectively, very close to a 30K from the last 3 years. And when we did his taxes for the current year, we made sure we did not lose any of those deductions. We made sure he was taking advantage of every pre-tax account. We made sure also he is saving for his retirement in a tax-free account. So Joe was very happy at the end because he's not only getting refunds, he is also saving for his retirement, even though that was not one of his goals. But his goal was, I just want to save money. But when you start thinking about strategy, start working towards something, you will get a lot of other benefits because those are some of the strategies. Another thing, you might say, okay, I don't want to save with pre-tax account and then after my money grows, I have to pay money on all this earning. But sometimes you might want to do that because you never know what strategies can happen later. How can you take your money in a way that you don't pay as much taxes on? Or even if you want to pay taxes at that time, you don't know how the law is going to change. I don't know, but you can defer it as much as possible and see after that when you have to pay taxes, you have to pay taxes. But if you have like planned your accounts correctly, it's going to benefit you big time. This is why like your goal really matter. Like your goal really matter. You want to see which one is priority for you. Some clients, they don't like pre-tax accounts. They want to just finish the taxes and grow their money uh, in a Roth IRA, for example. Some people hate the Roth IRA, they don't want to do it. That's fine too. This is not an advice from me to open an Roth IRA. I'm just giving it as an example because this is the most known that grows tax free. So this is not advice again. So you need to talk to your accountant, your financial planner as well. So this is the story of Joe. Simple. Well, it might sound simple, but when we do apply the strategies and work on them, like it's a lot of documentation. And that's the key with any tax plan. Now, the last story is Mary. I told you, if you remember, Mary wanted to purchase a home within 2 years. And if you've been there in that journey, wanted to purchase a home, you will know like you can get rejected, especially if you are a business owner, if you do not show a specific income, especially if you've been deducting money, and then you don't show an income. Even though you might have made a six-figure business, but still there's no income because you deducted a lot of things. Sometimes you go negative or close to there. So you cannot get approved. And if you want to purchase a house in a certain amount of money, you need to show that ratio of that how much money you have, and based on also your credit score and your credit, like how much credit you have, how much loan that you have in your account, a lot of things. But my point here is for taxes, you need to show a certain number. So I worked with her financial officer, not financial officer, the loan officer that she was working with, that's gonna approve or disapprove her later on. She knows who she wants to work with. And we made sure we do not deduct anything that she might be eligible for, but it's gonna put her in a very bad situation when she wants to get a mortgage. So she had to sacrifice paying extra taxes, because now when you're not taking a deduction, you're gonna have to pay taxes. So she had to pay extra taxes now because this is kind of the price to purchase the home later on, the house of her dream. So that's what we had to work on. She had a business, and mostly business owners are the people who are suffering. So let me tell you what we did exactly for her, for Mary. I made sure we had a W-2 for her. So we made the S Corp election for her because she was making decent money. So she can afford the payroll. She can afford to pay herself, and she can afford to pay payroll taxes on a regular basis. So she can be on S Corp. And that's going to show a W-2 income for her when she wants to buy a house. So that is very good for her. Plus her income as a business owner on a K1. And we made sure that her income shows a lot more than if she was taking a deduction. We did not inflate it, like we did not put fake information because that would be a fraud. No, we didn't do that. What we did is we just didn't take the deduction she might be able to take, like, um, you know, home office deduction, all of these things that she might benefit from. We just did not take it. It was like, okay, let's not do that this year or this couple of years so you can be approved, because that's the truth. Like you have income, but just not take the deduction you might be eligible for this couple of years. Hopefully she will be approved for the mortgage, and she will get in her dream house, and she'll make so much more income, and we start planning for retirement. We start planning for health, to build a wealth. There are so many strategies and so many situations where you can apply it for this person, cannot apply it for the other person. Like your goal matter. So there is no one answer fits all when it comes to taxes. So make sure you consult with a tax professional. Make sure you really take care of this situation. Taxes is something we all know it's coming. We all know it's happening. So you have to be working with a tax accountant and financial advisor all the time. So you can keep your hard-earned money with you, or achieve your goal as well, save for your retirement, build your wealth, etc., etc.